What if the biggest threat to your financial future is not a market crash, not inflation, and not a bad stock pick, but the simple mistakes you are making right now without even realizing it? Most beginner investors lose money not because the market is rigged against them, but because they walk in unprepared and repeat the same errors that experts have warned about for decades. And here is the scary part. Some of these mistakes feel completely logical in the moment, which is exactly why they are so dangerous. In this video, I am going to walk you through the most common and most costly investing mistakes beginners make. Not in a vague, theoretical way, but with real data, expert insights, and practical steps you can actually use. By the end of this, you will know exactly what to avoid, what to do instead, and how to build a foundation that gives your money the best possible chance to grow. Whether you have never invested a single dollar or you are just getting started, this is going to save you a lot of pain. So let's get into it. The first and honestly the most important mistake is waiting too long to start investing at all. I know that sounds simple, almost too obvious to mention, but the data is clear. Experts consistently agree that the single biggest investing mistake is not investing, or delaying investing until some perfect moment arrives. The problem is that perfect moment never comes. There is always a reason to wait. The market feels too high, the news is scary, you feel like you do not know enough yet. Meanwhile, the most powerful force in investing, compound growth, is quietly working for everyone who got started before you. Think about it this way. If you invest $1,000 at age 25 and earn an average annual return of 7%, you will have roughly $10,800 by the time you are 65. If you wait until you are 35 to invest that same $1,000, you end up with just $5,500. You did not do anything wrong in those 10 years of waiting. You just waited. And that cost you more than $5,000 from a single investment. Now multiply that across every dollar you delay, and you can see how devastating procrastination really is. The actionable tip here is simple. Start with whatever you have, even if it is small. A small amount invested today is worth more than a large amount invested years from now. The second mistake is investing before you have an emergency fund. This one catches a lot of beginners off guard because it feels counterintuitive. You want to build wealth, so you pour as much as you can into the market as fast as you can. But financial experts are very clear on this. You need 3 to 6 months of living expenses sitting in liquid savings, meaning cash or a high-yield savings account, before you put serious money into the market. Here is why this matters so much. As one expert analysis from Addicted to Success put it, new investors often pour everything into the market, then life happens. The car breaks down. The job disappears, and they are forced to sell their investments at the worst possible time. If the market is down 30% when your emergency hits, you are not just losing the emergency, you are locking in losses that could have recovered if you had just waited. Your emergency fund is not money you are wasting. It is the shield that protects your investments from being unwillingly liquidated at the worst moment. Build that cushion first, then invest with confidence. The third mistake is investing without a clear plan or goal. Many beginners just dive in because they heard someone made money in stocks or because a social media post made it look easy. But without a goal, you are just guessing. And guessing is not a strategy. According to multiple expert sources including Investopedia and Value Focused, one of the most consistent mistakes is entering the market without knowing why you are there. Ask yourself these questions before you invest a single dollar.